I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Ballara and this is the Know Your Why podcast. Today I'm here with Senate Eskridge. Senate is a Magic Valley native, born and raised in Twin Falls, and he and his wife have 5 children. I have 2. 5 sounds like a ton. They're small business owners and invest in multifamily. And Senate, as I mentioned, I'm going to let you tell your story. But first, I want to just say thank you. Thank you for coming on the show. Thank you for taking the time out this morning. Very appreciated.
Thanks for having me.
So why don't we start there? Just start with telling us your story. Tell us kind of your background, where you came from, and we'll follow that journey into real estate.
Yeah, so I've been an entrepreneur my entire life. I was the young kid that was selling things in school. I've always known that paving my own path was the way that I wanted to do that, and went through several different iterations of that. But eventually, I got into the financial services industry, and when I was in that industry, I was having very high level conversations with people about money, and their wealth. And we'd talk about investing millions of dollars and setting up 401ks for people with big companies, that type of thing. But my favorite aspect of that was helping the person get started. In fact, specifically, the 18-year-old kid that just graduated high school or is about to graduate high school, sitting down with them and talking to them about what their dreams are and what kind of lifestyle that they want to have, and helping them get to that point. As truly was, that one was my favorite. Unfortunately, it didn't pay really well, right? Because financial services, the way you get paid is by the amount of money that you have under management. But I've just always loved helping people, and for some reason, I just have that in my heart, a servant heart or a helper. I really want to help people achieve their goals. And so I was always very comfortable talking to people about money. And I help put, I don't even know the dollar amounts, but lots of money into the stock market. But the entire time I was investing in real estate. And I felt a little bit off by telling my investors to put their money into things, in the stock market, into, those type of traditional investment classes while I'm buying real estate. The entire time I kind of felt kind of weird about that. And as far as real estate, I started off like a lot of people do in the single family space. And I had a house I just couldn't sell. So I was that, what do they call them? Accidental landlord, right?
Yeah.
So I had to move, and I had a house that I couldn't sell. So what do you do with it? You rent it out. And I just fell in love with the cash flow. It's like, if I can do this once, why can't I do it a second time? And I did it again. And then I decided to buy a junker and fix it up. I was going for the BRRRR strategy. I'm sure that a lot of people are familiar with that. And before I could get it refinanced, somebody offered me a bunch of money for it. So now I'm an accidental flipper. Yep. And so between the BRRRR strategy and flipping and all that kind of stuff, I built up this fairly large portfolio of single family houses. And then I realized, wow, I can get duplexes. I can get triplexes. I can get fourplexes. So now I'm in the multi-family space, right? So I moved everything over into that space. But eventually I ran out of resources. I ran out of time. I ran out of money. And I quite frankly ran out of lenders. Lenders don't like to give you a whole lot of loans over 10 when the single family space. There's a lot of restrictions and things like that and regulations. So it just got more and more difficult. And so I knew I needed to shift. I knew I needed to do something else. And so I spent a good year just educating myself about other aspects of real estate, primarily in the commercial space. So I looked at things like self-storage. I looked at things like industrial, retail, even like elder care or assisted living style, that type of thing. But the thing that made the most sense to me was apartments and multifamily, because I had all that experience with rentals.
Sure.
But I couldn't figure out how to buy one of these big buildings on my own. Like how do you go out and buy a $20 million apartment building? Well, I'm the figure it out type of guy. So here's what I did. I called my residential realtor that helped me buy all of these apartment, or I'm sorry, duplexes and triplexes. And I said, I want to put an offer in on that $20 million building. She said, okay. Like, it was the biggest offer she's ever made in her entire life. Yeah. She took a standard residential realtor form, the offering form, published by the state of Idaho, and wrote an offer on this $20 million building. Obviously I didn't get it. Right. I mean, I literally got laughed out of the room. But thank goodness, because what would I have done with all those units? I had no idea what I was doing. So I took that as a life lesson that I needed to go back and educate myself. And to do that, I decided to join a mentorship group. And I did a ton of research. I looked at every mentorship group in the multifamily space that you could imagine, and finally landed on one called Jake and Gino. I'm not trying to plug them, but great program. They're absolutely phenomenal. I joined their program, and a year later decided to resign from financial advising and my W-2 job and go full time into multifamily. They helped me sell all of my single family assets and move everything into multifamily, and be able to focus 100% onto multifamily. And with that transition, as I mentioned, I really love helping people. I realized now, not only can I help my residents have awesome homes to live in, but now I have an opportunity to help people invest into those homes. Yeah. So I joined another group called Raise Masters, which helps me learn how to create apartment syndications. And basically, that's a fancy word for we take a lot of people and we pool their money together and we go buy this big building together, right? And so now I get to help these people have an amazing place to live over here, and now I get to help investors build those communities for our residents, and provide them stable returns with high rates, with tax advantages, and all they have to do is sit back and enjoy the benefits. And bringing that all full circle, the reason that's so important to me is because now I don't have to feel disconnected from my people. As I mentioned earlier, in the financial advising space, I felt bad because I was having people put money into stocks, but I was putting money into real estate, and now I don't have to do that anymore. And so it's just an awesome fit for me, and I love where it's gone and where it's taken me, and I'm just excited to be doing this.
Yeah, very cool. I want to sort of have a few questions just based on kind of the story, but one of the things, and you mentioned it again, is you were, as a financial advisor, you're helping people place money in the stock market, and you're buying real estate. So I've had sort of, I don't know, several reformed financial advisors on the podcast kind of have that similar sentiment. Are you not allowed to tell people, why wouldn't you be able to kind of, help them play in that position? Why wouldn't you be able to help them sort of look for real estate type investments and things like that? Are there rules to that, or is it just the company you work for? What's kind of the story there?
Yeah, so there are rules. The government puts out several rules regulated by SEC and FINRA and a couple of other organizations. But the brokerage firm or the RIA that the advisor works for interprets those rules, and they have their own compliance department. And every time you get into any kind of business in that industry, you have to disclose it to your broker. So let's make something up. Let's just say you're going to open a coffee shop. You have to go to your broker and get permission It's called an outside business activity, or an OBA, and you have to get permission to open that coffee shop. In my life, let me give you an example. My wife became a Mary Kay rep. That's the makeup. It was a makeup MLM, and she got bought in this company to get the discounts and get the package and all that kind of stuff. And I failed to report that to my company. That didn't go well. Let's just say that. They were not happy about that, and I didn't think that I had to report it. So when I was in the real estate business, I had to report every LLC that I created. And my brokerage believed that helping people invest into real estate is what they consider selling away, which is selling products that are not authorized by that company. Now, there are a couple of brokerage companies out there that specialize in real estate syndications, and that's all they do are private placements. Mm-hmm. And so I had the option. I could have just shifted and moved everything over to one of those brokerage companies or one of those RIAs and worked with that company. That would have been okay. But this is better for me because there's less regulations, less rules, less headaches. Now that if I am actually the issuer of the security rather than selling somebody else's securities, it's a little better for me. I feel I can do a better job for my investors this way.
Yeah, it makes sense. I mean, honestly, just a curiosity question. I because you hear about that, and it's I talk to investors when we have a deal we're raising capital for, and so I get talking to investors, and they're like, okay, I just need to talk to my financial advisor, and then come to find out like their financial advisor doesn't know anything about real estate, which it seems is often the case. And so it doesn't really help them to go talk to their financial advisor. They don't, it's just kind of like there's an area that they don't know or aren't maybe allowed to, kind of recommend for them, for their clients. So it is kind of an interesting thing. And you touched on sort of I guess we talk about the SEC side of this, where you can't necessarily, there are a lot of rules about what you can, sort of sell from a private placement type of scenario. So I see there would be a lot of red tape, and maybe it certainly makes more sense to do it yourself. And also, if you're entrepreneurial, you probably want to be doing it yourself. So that makes more sense. When did you get started with Jake and Gino?
Early 2021. I officially joined their program. It was March 1st, 2021 specifically.
Okay. So then within a year, you were able to kind of get away from your, I guess, W-2 and be, full-time in real estate.
Correct. Yeah. March. So it was a very specific March 1st. March 1st, 2021 was when I joined Jake and Gino. March 1st, 2022 is when I left my W-2. And something I often leave out when I'm telling that story, I'm very blessed and honored. Jake and Gino actually came to me and offered to allow me to be a coach for their students. So I actually teach their students now how to do the similar type of thing that I did, buying real estate, how to achieve their goals. And so I started that in July of 2022. So little part-time thing. I teach people how to buy apartments. So
yeah, it's a nice side hustle to go with your own apartment buying. So what are in terms of your actual investments now in multifamily, what's your focus, kind of look at market, asset class, what are you looking at? And then we'll kind of go into what role you play in those syndications.
Yeah. So I live in Idaho, so it makes sense that I should look for deals in Idaho. I'm actually doing a small joint venture right now in Idaho right now that I'm right in the middle of the acquisition process. When recording this, we're coming up on the end of the year, and I'm trying to get it done before the end of the year, but we may have to kick it into January of 23. That's fine. And then obviously you want to expand out of those kind of markets as well. So I'm very active in the Texas market. San Antonio specifically is my favorite market in Texas. I also really like Oklahoma. I'm working on a deal in Tulsa right now. And then I'm working with some partners in the Carolinas as well.
Okay, fantastic. What, and you can expand on this, but we've talked about it on the show before. There's a number of different roles within syndication. And I don't want to forget to ask you this, but I'd love to have you talk about the difference between syndication and joint venture. But let me start with the roles of, kind of within those syndications. As someone who's teaching students, I'm sure you go through this a lot. What are those roles? But what are the roles, and what are your roles? What do you focus on in your deals? You're kind of jack of all trades, or are you sort of focused in one specific area?
Well, being a coach, I have to be a little bit of a jack of all trades, because I have to understand each one of them to be able to teach people how to do it, and also to be able to point them in the right direction, right? I have to understand each aspect of the business. But so the roles are pretty clear, right? There's 4 or 5, depending on how you break it out. There's people that specialize in investor relations, which is another word for capital raising, right? There's people that are out there acquiring properties, so acquisition specialists. These are people that are either doing direct to seller calls or dealing with brokers to go out there and find deals and bring them into the team. There's people that do underwriting, and that's their only specialist. These are the guys that love Excel and just sit in Excel all day long and play with numbers and rent rolls and things like that, which
spreadsheet wizards.
Right. Yeah, I love those guys, right?
Yeah.
And then when all of that's put together, there's the asset manager, right? And the asset manager, this is the guy that's going to really execute the business plan, which I believe is probably the most important person in the business. Because obviously you can find a good deal, but if you can't operate the business plan and take it through to fruition, really there's not much point in doing it. So my specialty is really three different things. So number one, I love putting teams of people together. I love finding a deal and then finding all the right people to put it all together, which is not something I just defined as a role, but knowing those roles and knowing how to put them together is something that's very, very important.
It is. Yeah.
The second thing is I'm really good at the acquisition process. Taking something from LOI, from the time that a deal is signed from LOI all the way to closing. That there's so many steps involved in that process that people think you just put out an offer, then you go to the closing table, similar to single family. And it's not at all. I mean, that's a full-time job for that 60 days, putting that process together. And that's something that I've gotten really, really good at. And we could dive into the details of it, but just high level, that's one of my specialties. And then finally, investor relations and capital raising just makes total sense because of all that experience I have with the financial advising business. Sure. I love talking to people about money. So that usually falls on me.
Great. I do want you to kind of expand on that, sort of role of guiding through the deal, through the acquisition process, because it is not one of the roles that's specifically defined often, right? People talk about the 4 that you mentioned, but having been that person, like sort of the conductor of the orchestra, it really, you're right, you're just constantly people hire someone for this position. In some of the larger companies, they have just a transaction coordinator basically, and it's someone that has to do a lot of what I think you're going to talk about, but maybe go into some of that, because it is, I think there's a lot of stuff out there that's like, you watch the podcasts or you listen to the podcast, you watch the social media clips, and it's like, these are the 4 jobs and this is how each person does this job and stuff, but it's not really, as you said, it's not kind of submit offer and then go to the closing table. There's a lot to it.
Yeah, for sure. I talk to a lot of people that come from the single family space, right? And in just to compare purchasing a single family house to this, so let's talk through that process just real quick. Like single family, you put in an offer, you get pre-approved by a bank, and maybe you do an inspection. Then you go to the closing table. It's pretty simple. And I've seen single family houses close. Well, I've seen some close in less than a day, but a typical is, 2 weeks is pretty easy to do something like that. in an apartment syndication, there's so many steps involved. You start off by putting out that offer, that what in that space is called a letter of interest, is typically what we use. And this is where the negotiation starts with the seller. Once they sign that letter of interest, then you have to get a contract, purchase and sale agreement drafted by an attorney. This is now when the attorneys now go back and negotiate over things, right? So the seller and the buyer are typically out of the equation at this point. The buying attorney and the selling attorney are now doing that negotiation. Once that's approved, then you move into all of the due diligence to be able to put the property together. So due diligence, there's a lot of things to do. I actually have a checklist of the 101 point due diligence checklist. These are the things that you need to check before you buy an apartment building. These are things like physical inspections of the building. Somebody needs to go through all X number of units. If it's a 16 unit, you got to go through all 16 units. If it's a 300 units, somebody's got to go through all 300 units and assess the condition of each unit. It's just like on a single family home inspection, but imagine having to inspect 300 single family homes to be able to buy them. That's very similar to what we accomplish. And we have an Excel sheet that comes back with every single unit, the condition, and the estimated repair cost to get it up to our standards. We do the same thing for the inside, the outside, scope the lines, actually look at the sewer lines, look at the roof, all those kind of things for the physical inspection. And then we also have a legal due diligence period. So this is when we look at every single contract that's involved in the property that we're going to take on. So when you're doing your analysis of a property, you get what's called a rent roll. And rent roll is where you get, all the units in the property and what they are paying in rent, what their balances are, that type of thing. Well, I cannot tell you how many times I have gone to do the legal inspection and actually done a lease audit where I go through and look at every single lease, and it does not match the rent roll. Yep. Rent roll says that they're getting $1,000 a month for this unit, and the lease says they're getting $800 a month. That has happened so many times, and I've actually had it kill a deal. I had one lender, they were using the actual income rather than my projected income, and I could not get them to shift their vision on this deal and to accept my, what we call pro forma, right? And to be able to understand that I'm going to be able to take this and increase the income in less than a year. They wouldn't accept that. And so because the actual leases didn't match the rent roll, they walked away from the deal. And I couldn't get another lender to come on in time. I actually lost that deal, and it cost me thousands of dollars, tens of thousands of dollars, not hundreds or 50s or anything, but I think it was about $19,000, somewhere in that range that I lost on that deal, because I'd already paid for so many inspections. I'd already paid for flights. I'd already paid for all these things to get out there to inspect this property. These are all things that you have to do in that process. All the time while that inspection's going on, the due diligence, you also have to be working with the lender. That you're going to go get your biggest partner in one of these deals is always the bank. Who's going to be loaning on that product. So you got to be working with them that entire time and jumping through their hoops, filling out their forms, getting them tax returns on the signers, getting them bank statements for the property, all of these type of things that they have. Fannie and Freddie have a giant checklist of things that you have to provide to them. And if you don't know what you're doing, a lot of these people, they don't even have these documents. So you got to go and create them. The first time was quite an eye-opener, right? And then during that time, you also have to order things like appraisals. We do a thing called a cost segregation study on all of our complexes. We order that during, so that it can happen like as soon as we close. So we order that during this inspection time. Getting estimates on any of the repairs that we have to do. All of these things that we have to put in place so that when we close on the property, we can take action on our business plan day one. And like you mentioned, it's a full-time job. People hire these transaction coordinators. And it's something that I've gotten really good at. And it goes back to that thing that I said of, I'm really good at putting the right people in the right place, putting teams of people together.
Yeah. And and to be clear, this is all going on at the same time. So people listening, it's not, he mentioned sections of it, but it's literally all just happening at the same time. You're submitting and it's true, you submit that LOI, you basically have already done your negotiation with the seller, and then the attorneys have to turn that, 1-page document into a 70-page document, and it make sure that nothing gets missed, and you're tracking down your finance. I mean, it's chaotic, to say the least. There's a lot going on at that point. So it is a really important job to be that, sort of coordinator of all those things that are going on and have it go smoothly. So I can see where it's a good role too for someone if you're training people, because you are familiar with all of the different components, and so that person is going to tie it all together, right? They're gonna help establish the business plan and pass it off to the asset manager, right? Like and get it across the finish line. So very cool. I know we had actually Gino was on the show a little while back, and I think one of my things, I know a number of people have gone through the program. One of the things I think is cool is they don't just talk about only syndication, right? He'll talk about joint ventures. He'll talk about doing some programs. It's like, you need to go bigger. That's the way to do it. Scale is always the most important thing, but they'll talk about joint ventures and things like that as well. So I would love it if you would kind of give people a little idea of what that difference is, because I think a lot of the terms get just kind of tossed around, and maybe people don't know what does a joint venture mean versus syndication.
Yeah. So syndication, they've got two classes of, we use the term partner. It's not the technical term, but we do use that. We use the term general partner and limited partner. And you've got two different classes of people. And the general partner, what they do is they're the ones out there running the business on a day-to-day basis. These are the people that are fully responsible for that business plan to be implemented, and they put their time and their life on the line, and they work very, very hard to provide great returns for the limited partner. And being a limited partner is like everybody's dream. You get to put in some money and sit back and relax and don't have to do anything but read an update every month or every quarter, and then cash the checks when they come in. We get to take in all those great returns that we talked about earlier as a limited partner, and you have limited risk. There's really no risk on the table. Other than the amount of money you put into the deal, you essentially have no other risks. If everything is done properly, if the general partners did their job properly, you're shielded from anything that happens in the deal. But by doing that, you also give up a bit of the profit to the general partners, right? Those general partners, they need to be rewarded for all that work that they do. So, they have what they call splits. Say 70-30 is a really common split, which what that means is that 70% of the profits, go to the limited partnership, and 30% go to the general partnership for all of their work. I've seen 80-20, I've seen 60-40, any combination of those type of things, and every deal is going to be unique. And the reason that happens is, again, because those general partners are putting all that time and risk and all that kind of stuff out there. In a joint venture, a little bit different. A joint venture is usually a smaller property, or at least a less expensive property, because you don't have to come up with as much money to be able to purchase one of these. Mm-hmm. And again, typically you could joint venture any size deal if you have enough money in your partnership, but they're usually a smaller property. And now all of the people in that partnership have to be active. There's no longer that separation of the two different types of partners, right? There's not a general partner and a limited partner. Everybody's kind of putting their work out there on the line. So these are for more people that want to be active in the business, people that want to have a job, people that want to have a role. And because they have that role, there's usually a little bit more profit involved. But again, do you want to be a passive investor and actually go out there and just put your money to work? And you can still now focus on the rest of your life, whether that's a job or your family or vacation, whatever it is that you want to do. Or are you looking to get into this business and become an active partner? And really, that's one of the biggest differences is between a syndication and a joint venture. Joint venture, everyone has to have a job. Now, I've seen that sometimes when everyone has to have a job, one of their jobs is to take notes in the meeting, right? So there's different scales and different levels of activity.
Yeah.
And of course, I don't want to get into too many examples of that and pointing out different ideas for people. Don't want to get into too many gray areas there, but the amount of activity somebody has to have can be limited, but you still have to have an active role.
Yeah. Yeah. I think sometimes on the joint venture side, somebody's job might be having a lot of money, right? That's their job. They're the sort of the capital source. So it not to get into all the legal implications of all of this, but you have you certainly, whether you're doing a syndicate, if you're doing a syndication, you have to have an attorney involved. You have to have an SEC attorney.
Yeah.
You're doing a joint venture, you should have an attorney involved. You may not have to have an SEC attorney, but you need to have someone who's very knowledgeable in contract law and have a real still treat it like a business, and you don't, I guess technically, two friends saying, hey, we're going to go buy this duplex is a joint venture, but it's a little bit different in terms of what you're referring to here, but probably shouldn't be treated differently, right? You those two
Right.
friends should still have a contract, an operating agreement, all of that, so that kind of the attorneys will make sure you've accounted for the things that you don't think are going to go wrong, and hopefully don't, but if they do, it's already been kind of spelled out in advance.
Absolutely. An attorney friend of mine said his job is to solve your problems before you have them.
Yep.
Yeah. I think that having a professional involved in every aspect of any business, they're worth their weight in gold. You have a good professional,
Yep.
right? They're going to do their job better than you can do it.
Yeah, it's 100% true, and that even goes back to you were speaking about sort of that whole due diligence and acquisition process, and you mentioned a lot of things, but there's a dozen other things that are happening at the same time, and you need to establish insurance. And so you talk about having a good professional, having a good insurance professional, someone that you trust to come in with the quotes that will be reasonable but also protect you in the event that something goes wrong. So
Absolutely.
it is truly sort of that team sport, and I guess sticking with that sport analogy, that the team needs a good coach or manager, or whatever your sport you're interested in. But yeah, it's a incredibly important to sort of navigate all of that and have the right team members in place, whether those are team members in terms of the investors or the general partners, or their team members in terms of the professionals that you've hired to help with the transaction.
For sure. And you mentioned, there's so many other things that I didn't talk about. We could do an entire show, an hour long, just about the acquisition process.
Oh yeah.
Easily.
I don't even know it would fit. I don't even know that it would fit in an hour. I mean, you really, and that's what a lot of the books, I think, focus on, right? Like a lot of those, sort of books on syndication are like, this is the process, and it's good. They're good outlines, but even still, until you do it, you're gonna run into things that you didn't anticipate. That at least I haven't. I've read a lot of these books and haven't seen it. And they're different from residential. If you've been through residential transactions, single family side of things, they are different. Even again, back to that insurance example, that the insurance process is different. You can't have more than one broker bidding at a particular insurance provider. I didn't know that. Like it just nobody told me that ahead of time. And then one broke. I thought, well, I have multiple insurance guys, go out there and get us bids, and it'll be competitive. And it's like, well, I'm already locked out of these 5 or 10 brokers or providers because you've got someone else doing it. So there's things that again, I haven't seen that in a book. So, there's certainly a lot of the experiential knowledge that comes with actually just doing a deal along the way.
Same thing happens with brokers for banks and things like that. So I had a commercial lending broker deal similar to that. I shopped the same deal. It was 5. I sent it to 5 brokers, loan brokers, and all 5 of them called me and chewed me out. Because they did that exact same thing. The first one went to these 3 banks, and this one went to these credit unions. These ones went to these lenders, and they all got egg on their face. And I had to learn that through experience. Nobody told me that, so now I know, and now I don't do that. Right. But it took me a long time. Only 2 of those 5 will even talk to me today. The other 3 are like, no, never talking to you again.
Yep. And a lot of the brokers, and I understand why. I mean, if you have any background probably in business or real estate, a lot of times it's like people I think hear enough, even just on HGTV, hear enough like you should get 3 estimates for this work, blah blah blah, right? So people think that same thing applies, and it's not so much that it doesn't, but if you have a trusted broker, they're already doing that for you, right? So they're that insurance broker or the mortgage broker, they have 20 or 30 banks or insurance providers that they're doing that for you. So having and they don't all have the same ones in their Rolodex. So it is possible that one debt broker might have a different lender available to them than another, but that speaks to the importance of finding the people that you like working with, you trust, and they sort of do a good job for you and have your best interests in heart, and then keeping them, right? Like it might take you a few tries to find the right person for you, but once you do, you keep them and you treat them well, because and as you said, you got 3 of those 5 don't want to talk to you anymore. So it's kind of, there's a reason behind it, and it might seem like well they shouldn't be afraid of the competition or whatever, and it's just not so much that. It's just a waste of their time if you've already gone to someone else and then they're locked out of that particular provider.
Exactly. Yep. 100%.
Well, Senate, in the interest of time, we definitely could talk about this for hours in terms of what happens during due diligence, but I want to get to the part of the show where I get to ask you the questions that I ask every guest. The first one is based on the name of the show being Know Your Why. And so my question to you is what is your why? What drives you forward? What kind of keeps pushing you towards success?
Yeah. So I'm going to give 2 different answers to that maybe they kind of go hand in hand, but they're 2 different things. So number 1, I mentioned earlier, I love helping people. And I always want to find a way to help people in their life. And so I love sitting down with those investors, talking to them about their dreams, talking to them about their goals, and helping them achieve those goals. But selfishly, I want to focus on self-improvement. I'm a self-development junkie, self-proclaimed. I'm a junkie, right? If you're going to be addicted to something, I think self-development's the thing to do it.
Right. It's not bad.
And,
not a bad thing.
You
to
tell
have
probably
addiction
by
to.
all the books and everything behind me. I love becoming a better person. And part of that is then now I can become a better to help other people, right? If I improve myself, I can help other people better.
Yeah.
So it goes hand in hand. So I want to help people improve their finances and their life and live the life that they want to live, right? Whatever that means to them. And then that in turn allows me to continue feeding my self-development habit. And it's this kind of I want to use the word vicious cycle because that's the term that we all use, but it's not really bad. It's a really good cycle, right? So it feeds one thing, which feeds another thing, right? I can help people and that gives me money so that I can now become better, self-development, that type of thing. So then I can better help people. So helping people and self-development.
Yeah. Yeah. No, I love it. I think almost all of my guests that are, not just starting their journey in real estate, and even some that are, I mean, I think you start out with sort of your your personal why, but then you have that also that sort of impact why, like what you find your purpose almost through this, process and the self-development, and it's, it is really kind of amazing to see. I think one of the conferences, I think it's coming up again, but last year's best ever conference, there was a lot of speakers that just talked about, kind of where they got to from their impact side of things, including Joe Fairless. And it was like, that was the best thing about the conference to me, is to see not like, oh, I want to have $1 billion of assets under management, but what does that do for you in the ability to give back? I think that's just kind of an amazing, sort of forward-looking vision as far as, where you can get. Second question for you is, tell us something about yourself that maybe isn't common knowledge, special skill, a hobby, just something that gets the listeners to know you a little better that you're comfortable sharing. Aside from a cool first name.
I'm kind of an open book. That's a hard one for me, because I tell people everything about myself. The cool first name, there's a good story there. I have 5 kids. You mentioned that. Actually, no, there is something that I don't talk about a whole lot, but it's something I'm very proud of. I'm a Shriner and a Mason. I don't know. Some people don't even know what that means. So they're the guys with the funny hats that drive around in little cars in the parades. But more importantly than that, the Shriners have hospitals all around the world, actually, that help kids that have some kind of injury, spinal issues, burns, that type of thing. So the Shriners Hospitals for Children help people live better lives, and lives that they couldn't live on their own. So I'm pretty proud to be a Shriner, and to be a Shriner, you have to be a Mason, which is, again, a whole nother conversation we could have for another hour of what that means. Yeah. But it is something that I enjoy being.
That's awesome, and something to be proud of. It's funny, I do know it is, because as a kid grew up in Massachusetts, like as a kid, we would go to, in the parades, we would see the Shriners, and like my family loved it. Like that was like the favorite part. Like my grandparents, my aunts and uncles, like just love seeing that part in the little like little motorcycles, like just very cool. So I do have some familiarity, but that's pretty neat. When people hear this and they want to reach out to you, what's the best way? We'll put whatever you want in the show notes.
Yeah, so the best way to find me is just my website, which is senateskridge.com. And I am on all the other social medias as well, LinkedIn and Facebook, but the website's the best place to reach me. My contact information's on there. I'm actually also just launched a Investor 101 course. People can go to my website, senateskridge.com, under resources, Investor 101, or senateskridge.com/course. Pretty easy to get to. And there's a lot of information in there that we've talked about, and a lot more to really help people learn how to be the best passive investor they can be. As I mentioned earlier, I love helping people. So if I can empower them with knowledge, then I feel like I've helped them.
Awesome. Final question for you. What is a piece of advice you would give to someone who is getting started? And you can take it whatever direction you want, whether that's getting started as an active real estate investor or passive real estate investor, but just someone getting started, they hear you on the podcast and they're like, yeah, that sounds cool. I want to do what that guy does. What would you suggest to them?
Yeah. I'm going to steal this straight from Stephen Covey's 7 Habits of Highly Effective People. And that is, begin with the end in mind. I highly recommend anyone who's starting any journey, sit down and figure out what that looks like, what it's going to look like at the end. And if that's the way you want your life to lead, work backwards from there.
Yeah, it's a great idea. And something that I feel like a lot of experienced investors and entrepreneurs and stuff will say that, and maybe didn't do it in the beginning, right? You're like, I'm just going to start doing something. But a lot of people will look back and say, they got to a point where they did have, you almost have to say, okay, what do I want out of this? And now, sort of reverse engineer it to what it looks like to get there. So I think it's a really great piece of advice. And if people start thinking about that, right from the get-go, it really will help you, sort of get there faster and probably without as many roadblocks.
And a lot of people mean stuff like that when they say things like go bigger faster, or I would have went straight for multifamily, or I would have done this, or I would have done that. But the most important thing is, what does the individual want?
Right.
What kind of life do you want, and what do you want that to look like? And then go for that thing. Because it doesn't matter what Senate wants, what Jason wants, or what Gino or whoever else we've talked about, what they want in life. Yeah. It's what do you want in life, and how do you want your life to be?
100%. You have to know what it is you're trying to achieve. I think there are a lot of people that see, they see that people are successful in real estate, and they're like, okay, I'm going to buy a duplex. And you're like, well, okay, but why? What does that look like for you? You want to be a landlord? Are you going to manage it yourself? Like, people just don't. So I think that's exactly what you're getting at, is in that, you like teaching people, you want to give back, you guide them to what it looks like for them, because certainly buying a duplex and self-managing it, there's nothing passive about that. You just bought another job. So if that's what you want to do, great. Like, that's fine. If you like answering directly to those tenants, or you have a job that makes good money, and you want to get into real estate and you just want to be completely passive with it, well, then you get into a syndication, or find someone like yourself to invest with. I mean, there's just it's really important to know what it looks like for you.
Absolutely. Yep.
Cool. Well, Senate, thank you so much. I really enjoyed this. I think it was a great conversation, and I think a lot of value for, realistically, probably both passive and active investors, some of the topics we touched on. So thank you so much for your time.
Yeah, thanks for having me. I enjoyed it. And if anybody has any questions or anything, don't hesitate to reach out to me. Happy to help.
Awesome. Yeah, and for folks listening, I'm sure you got a lot of value out of Senate's discussion today. So please like, rate, and review the show. Allows us to get more good guests on. Thank you.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.